All right. Hello, everyone. Happy Thursday. Welcome to your weekly market check-in here with myself, Greta Law. I'm your host, and I'm joined by David Prince, the leader of T3 Live's Inner Circle virtual trading floor. Happy Thursday, David. How's your day going so far?
Good. I always say good. Today was kind of I've had better days. It wasn't amazing. It was just a little subpar today.
Yeah, I think it's kind of a quiet week, I feel like, as we wait again for the big Friday.
Yes.
Last time you and I talked, we were waiting for Jackson Hole on Friday. This week, we're waiting for NFP tomorrow, the jobs report. So, kind of the market is in this
It's the preamble all
waiting
week.
mode. Yeah. So title of our stream today, market update ahead of NFP. So let's talk about how things are looking as we head into that Friday morning jobs report. Ahead of the jobs report on Friday, the official one from the Labor Department, today we did get ADP's private employment report. Lower than expected. I think, what was the number? 54,000 jobs.
Yeah, and some had as high as expectations of 75, but I think it was more like 65 to 68. Bottom line, it was below.
All right. Market liked that report. That's what the market wants to be seeing, a slowdown in job growth so the Fed can cut rates. How are you feeling headed into tomorrow with where the market is positioned, how it's been trading, and all of that ahead of the jobs report tomorrow morning?
I'm a little conservative because I feel like we have a lot riding on tomorrow. So with Jackson Hole and basically the market's response, and there are people out there who said, well, he didn't say that, he didn't say this. We haven't been on since then. So I will say, in my very strong opinion, he is a very measured man, and he speaks in a perfect neutral way. In other words, he will tell you only so much, he will never take a side fully. So I thought he very clearly told us that for the first time, and frankly, in several months, he is as worried about jobs growth in the economy as he is inflation, and maybe more so. So I then kind of shifted where I was focused and what stocks we were buying immediately, and went to the TNAs and certainly went very aggressive housing. And it's been pretty solid couple of weeks. So I trimmed a lot specifically today because, well, there's a lot riding on this because I'm not the only guy who did that, as evidenced by the way housing stocks are flying this morning, this afternoon. And I think that, if it's in line to even kind of strong, are we going to pull back a ton? No, but we're kind of like 110%. We're cutting rates in September, and maybe we'll get another cut. So we do need a pretty tame number. So I take some profits in front of it, being that expectations are heightened into tomorrow's print. I'm not going to be flat. That's not the way I roll, so to speak, but I've taken some profits ahead of the print.
When it comes to a report like this, one of the big things with the last jobs report, obviously the headline number came in weak, but it was also all of those backward revisions really weakening the months headed into July. I think June, May were both revised lower. Does that
the same revision we saw in history, I think, right?
Yeah.
I don't think we've ever seen anything like that.
We might see another revision to July come tomorrow, even weaker than we thought. Does that put less credence in the headline number in the market? Obviously just reacts to the headline.
You can't be all. First off, revisions might be as important, absolutely, because that's the backdrop to the story. Like, wait a second, we can't even trust this number because look at the size of the revision. So you do have to take it with a grain of salt. You can't be all in or all out on these numbers. The revisions tell you that, right? I mean, we have such drastic revisions. So I would say, yes, you can't formulate a portfolio and say, based upon that NFP, you can know there's heightened risk going into the event. But because of the size of revisions, I think some people are hesitant to put too much on it. So although it'll be market moving, I wouldn't, it's not the end all. CPI, you have a new CPI, and is it PPI and CPI coming out pre-FOMC meeting? Those will be very important as well.
Let me look at the schedule. I think it's CPI. Yeah, PPI and CPI are both next week.
So, we can have even a strong report, lots of revisions, and then people say, okay, now it's about inflation. Is it in check? Those two numbers will give us the green light to say, yeah, we're getting that rate cut, maybe even a second one before the end of the year. So long story short, it's something to be aware of. I'm taking some profits in front of it, but you can't put too much on it, because when you have revisions like that, it tells you factually the number's not really correct, right? That's what it says.
Yeah. All right. So when we're looking here at the market pre-NFP, let's just do some hypotheticals. If we get a hot report, what would your game plan be? And if we got an inline or cool report, what would your game plan be?
A hot report, I think given the size of the bounce we've just had, right, in the Qs, that we could probably be short the Qs. I'm not going to extrapolate too much and not be long housing or small caps because of it. So if I were to look for a short, it's a bit counterintuitive, it would be the Qs. And then ultimately, if we pull back enough in a limited growth, non-rate cutting environment, where do you go? You go right back to the same old stocks that frankly have pulled back some. So you're going to go to the Metas and Amazons and Googles. Google just had news, obviously, or Alphabet, but you will go back to some of those big cap names that recently had some great earnings, some of them, on pullbacks, because that's what works in that type of environment. But my gut is, if it was the type of number where it wasn't too hot, we're still most likely going to get at least one cut, and the jobs market's rolling along. In other words, it's not falling apart. Then, if we saw a big enough pullback in housing, that I'm going to keep going back to housing. Like RKT, Rocket's one of my favorites, right? When it comes to interest rate sensitive equities. And recently, when people got concerned the last few days about the market, we saw a pullback from the high 19s all the way to mid 16s. And I think it was yesterday, I was buying it at $17. Today we're at $18.50. In other words, it just bounced like 8% a straight line. So I will go back to my favorites in housing, Nail, Rocket, because I don't think one number will change the course of rate policy. So those two, and DR Horton if we ever get a pullback, because that continues to lead all the housing stocks. If it's hot, and we just decided there are no rate cuts, it's going to be back to Mag 7 when they pull back enough.
All right. So you and I mentioned to each other ahead of time, and I heard you talking to the room before we got on here. Absolutely killer move you guys have nailed in the housing sector. You were involved in RKT, Nail, all those names pre Jackson Hole, but then post Jackson Hole, obviously the move you've seen.
Lit the fire.
Yeah, you set up for quite a move after Jackson Hole. So talk about that trade, how you've been managing it, and what your thesis is on this sector when it comes to the backdrop that we're now in, looking for rate cuts.
I've been really bearish housing for 2 years, and most people said, "You're, like, how?" Like,
you and I have had many discussions.
Aren't they cutting rates? And I said,
yeah.
like, that's not going to be enough. You don't understand. It's like, well, but there's so much demand and supply won't meet it. I was like, okay, whatever you say. But anyhow, as it turned out, housing was not good. And then I looked at things and thought, okay, we're far enough long into a let's say housing pullback, right? A bearish housing market, that I think it gets worse, but the stocks themselves are going to look out 6 months in advance and start to look at more than one rate cut, a series of rate cuts. And these stocks often will price in 6 months or even a year. They always tend to react first in terms of all sectors on the upside and downside. So I said, I think it's time, because we clearly are going to get a cut. And if we get a series of cuts, does it put a bottom in housing? I don't know, but it'll put a momentary bounce in housing itself, and these stocks will price it in, and they are pretty darn cheap. There's not a lot of areas in the market where you can put single-digit PEs or teens, 15, 16 times PEs. So when I looked at Toll and R, Pulte, and all this group, I thought, you know what? If they can operate, and by the way, earnings on a lot of them were really pretty good versus the environment, they were phenomenal. Like, some of these companies actually beat numbers in a housing environment that sucked. And they do this by providing their own rates, right, that are competitive to the actual rates they'll get in the bank for the first year, right? They'll give you 4% or something. And then you get the bank's rate. But whatever they're doing, it's working. They're able to prosper and make money in a really crappy environment. So if they can do that in a bad environment, give them a few basis points and rates changing, and holy Jesus, these guys can do really okay. So my thought was we've got to be in now, because even if things suck, by the time we see it in the housing market, it'll be too late and stocks will have already gone up. And then our KT was different. I said, I love what they built, right? Soup to nuts. They built like this incredible machine where you can go look for your house. You can get the mortgage for your home, right? You can get the broker for your home. So they have built a really solid, through acquisition, little monster here that the next bull market in housing should really love. So I just said, I'm going to stick with this. I've been in since 11. There are a few times where I took profits and added back, a lot of times, and that's what I keep doing. But I won't be flat rocket for a long time. So that's how I play.
Another focus, well, another really good trade for you this week, I don't know if you're still focused here, has been Baba post earnings on Friday morning. They reported earnings. You in the room got long, and then we had that chip news, right?
We had a combination of great numbers from their cloud, and then the chip news that would compete with Nvidia.
On Tuesday. Sorry, it was Tuesday, because
you had like
Monday,
a
Tuesday.
combo there. But people really,
Right,
it was less about the number itself, the headline number, more about, wow, cloud, like they might be in growth mode now. So you put those together, the chart looked phenomenal, and I'm a little hesitant dealing in China because I've had personal experience. I've done deals in China. I've just been around, so I know you have to take any Chinese stock with a grain of salt, not to mention because of geopolitics. So I looked at it and I said, okay, if there's a moment in time this can go, it's still 20 points off highs of early 25. It just had numbers. Everyone is searching for laggards. This meets all the criteria. And this is in growth mode, perhaps, and people are going to want to re-rate it because it trades at 12, 13 times, so it's not expensive. So I got pretty aggressive as it crossed 128. Then I got to a trailer as it got to about 138 to 140. Now I'm sitting with that trailer. I am always a little hesitant to take these trades too long. In other words, to me, there's Rocket. That's a fundamental story. I like where we are in rate policy. I like where we are as a company. When you're dealing with Alibaba, there's so much more because you got to worry about politics. You got to worry about, well, one day there'll be an article from the journal about delisting. Will one day Shin get together with Putin and decide that they wage war in America? I'm being dramatic, but you get the idea. So will it ever be a focus 110%? No, it can't be. It's just there's too many variables, but it'll be a great trading stock that at certain moments in time where I feel like everything sets up, I'll get aggressive like last Friday. And by the way, Monday, the minute it pulled back, I might even bought more size because I really felt confident we would bounce. The minute we pulled back to 133 on Monday, I bought some size again, and then we rallied again and I sold it. So a momentary opportunity that I'm still in, but not a day-to-day focus because there's just too many variables that muddy the waters. So like it, but can't say I love it because it's China.
A trade, not an investment, right? For everyone, all of our audience, I do see your questions. We'll get to those in a bit. So here's your call to submit your questions for David if you have anything you want him to specifically address. But while we wrap up our conversation here, and then we'll get to those. We are rounding out the very end of earnings season. We're getting the laggards and the stragglers in here at the end, including you and I have not spoken since Nvidia reported earnings last week. That, of course, being the biggest here at the end, but then we got a lot of software names, some retail names, etc. Start with Nvidia. What did you think about the earnings report? Obviously, the stock has been down since the report. I think we're down like 6% since the report. So what do you think about it and what it means for the stock from here?
So I would say Nvidia has driven like 50% of my profits for the last few years, right? I have nothing against it, but there are moments in time where I see absolutely nothing to do. And I wrote a tweet about this. Some people were like, huh? I said I could care less about Nvidia's earnings. I care about how the market responds, but I think the opportunity, speaking last week, pre all the hoopla, I wrote 2 weekends ago, I said, to me, it's about software. Is the opportunity more in software and MDB and Snowflake than it is Nvidia, because I think Nvidia can give out, free ice cream, maybe buy everyone a house, and the stock could still go down. Just expectations are so high, I don't really see a great risk reward. So got lucky, that came true. Earnings were good, but by the way, they weren't even as good as I thought they'd be. Data center was a bit light. Everyone knows China was not included in those numbers, and once included, they would be higher. But overall, you back out the China numbers, it still wasn't unbelievable. It was very good. It's the law of large numbers. It's unfair. Any other company reports those numbers, we would fawn on them, right? Like this is unbelievable what they've accomplished. So I'm going to go with what I originally said. Numbers were great. I expect them to be great, but it's Nvidia. The stock, I know where it was, right? Because I bought it there. It was 86, and I bought some at 93 in April. So going into the print at 180, we're talking about the largest company in the world. I didn't see a great opportunity. And as it pulls back, and I said it surely probably will, I'll get more involved. I will get involved again on the pullback at some point. I'm waiting for a bit lower. And then, earnings were like we thought. Really good, maybe not good enough. And the opportunity was in software. So that's what I think about Nvidia and what happened last week.
All right, and then let's talk about the software names that have reported. I think it's like, oh goodness, Snowflake, Salesforce was this week.
So the names that reported last week were, the two important ones were MongoDB and Snowflake.
Right, and Snowflake.
MongoDB was gorgeous. It was like the print of the quarter, and the stock had its largest move in about 4 or 5 years in a 24-hour period, and continued to go higher for about 2-3 days. Snowflake was excellent. Maybe not MongoDB, but really, really solid and continued higher. Since then, we've had more software numbers. We also had CrowdStrike, which was a mixed number, but people were impressed with annual recurring revenue, and they thought that was enough to turn it green. Moving on to software, today is an abomination when it comes to software. We have Figma. No one was impressed with their first quarter out. CRM, I was even hoping that maybe they would surprise us a bit like Snowflake and MDB, but I told everyone, I said, the odds that I'm right a third time are probably not good. So CRM, disappointed in guidance. It's a longer story to get AI revenue growth out of them. It's not happening yet. It's just not. Eventually, maybe it does, but not yet. So software as a whole is under fire. It's just not, it hasn't been a great quarter for them. And frankly, there are real stories out there that tell you, hey, AI is hurting their core business models. And then there are a few where AI is actually enhancing, right? Because they've embraced it early enough and they're there, like an MDB with Atlas. So it's not, you can't paint them all with the same brush. There's some specific names that are doing better than others, like MDB and Snowflake. But overall, software is still kind of under fire, especially with the AI thing.
Mm-hmm. That's a good juxtaposition to look at the the companies that have embraced AI early and it's benefiting their business, like MongoDB, versus the companies that are resisting.
Hit a few times because it kept focused there. Their legacy business was not doing as well. There were a couple quarters up and down, and the stock wasn't doing particularly well. And then once it came to fruition, boy, it made up for lost time. So it is exactly.
I mean, it's like Meta when he said, "All right, this business isn't working. Let me focus here on AI." And I mean, look at what.
Boy, that was quick. That didn't take long. I know because they sold it too early. But exactly.
All right, let's talk about American Eagle. I want to get your opinion here. Up 35% today, post earnings last night. Call buyers got paid today for sure. This become another meme stock focus, and then we had the Good Genes ad, and then so now looking here, is it still a meme stock, or is this a bona fide company that?
No, like anyone who says it's just a meme stock, doesn't know how to read, right? They literally doubled estimates, and they said this is not a company that started 2 years ago. They said it is their most successful ad campaign in history. That's their words, not mine. So when you by the way, didn't double revenue, double earnings estimates, right? And you say this is the most successful ad campaign in our history, you have to take notice. Now, does that mean that it's a growth company again? No, right? We don't know where they go from here, right? Designers decide that. Are they on trend? Are they not, making too much inventory so they get lost on last year's trends? All that starts to come into play. But is it up for a good reason? Absolutely. And are there a lot of shorts who are betting that it was just a meme stock getting killed today? Absolutely. So to me, it makes plenty of sense, right? You catch some people off guard. I've been long it. I even had some dumb calls left over today, but I sold all my stock for the print like an idiot. Wish I held. But it's up now 35%. Was it good enough to be up 35%? No, but any company that no one expects to go higher, like a lot of the analysts said, oh, Sweeney, that's not changing the numbers. I mean, some guys I know are really bright guys who are in touch with the analysts said, oh, the numbers are still off. They were telling me that a week or two ago. Look what happened. So I don't think people were ready for this, the size of the move. But it makes sense.
So when it comes to a name like this, when you're looking at a stock up 35%, what do you look for when it comes to like a pullback?
You look at a pro gap, right? Size of the pro gap.
Right.
So you look at it and you say, holy Jesus, this is a real move. Where is it viable? And you'd say the bottom of the pro gap is 721. And for now, the lower you get to 721, the more you'd buy, as long as it's within reason and the RSIs come in. So it's probably going to trade in that pro gap. And dips will probably be bought, especially if numbers go up. And you look at the long-term chart and you say, okay, if this is a viable company, where did it once trade? And you'd be like, oh, 25, 30. There was a time where this was a growth company doing well. So for people that want to own this, you have a gap that people will use today to trade with, the lowest 721. A lot of people who are just technical in nature. I'm not always that way. I like to include fundamentals. If a chart looks ugly, I don't just get out. I'll often be the bottom, right? In this case, you're out, right? A lot of technicians would just simply say, if it breaks 721, I'm done, and I'll buy dips. Will I focus on it? No, but wow, definitely you should make note of it.
Yeah, for sure. All right, let's get to some questions here from Twitter. Are you tempted to start scooping up Cava down here? We've talked a lot about Cava.
If I was looking at, where's it now? 65. So because I've made a lot of money in Cava and a lot of people have followed me, people ask. And it's exactly what I told the chat. I said, if you are looking out 2 years, I think you'll buy it. Like, I don't even think you think twice. If you care about where it goes in the next couple of months, I think you got to wait for 60 or below. And I haven't bought a shit. I'm long-term minded, but not that long-term minded where I want to be 5-6 points early if I think I can avoid it. So I think it's tough to be in fast casual, but if there's a name that's special that hits all the right spots and checks all the boxes and is the next great growth stock in that domain, I still believe it's Cava. Like, I strongly believe. And I think anyone that goes there generally comes out. I've had friends go, oh, I finally went. Oh my God, I can't believe I never went. And by the way, I'll have people be like, it's not authentic Mediterranean and I don't like it. Be like, yo, schmuck, it's on the side of a highway. What are you expecting? So for what they provide, it's the best out there. And there's like minimal competition doing what they're doing. Great management, love it long-term. Short-term, I think you'll see 6.
Not authentic Mediterranean, whatever, it is good.
You know what I mean? It's silly. I'm like, yeah. How do we build authentic Mediterranean around the country and then enter? That's not the way it works.
Yeah.
Chipotle, by the way, ask someone
not authentic Mexican
that's from there how they feel about Chipotle. I mean, we got to be realistic.
I mean, I live in the San Diego area, so we have like a lot of authentic Mexican.
Give me a second.
Chipotle's not it.
So we're getting just 1 sec. So we're getting a little turn here. Circle, guys. I would.
Oh yeah.
I'm not gonna trim too much, but if we got towards 118 to 120, I do a little trim on circle. I'm back. Hi.
All right. A live look there, everyone, at how David moderates the inner circle. All right. Any thoughts on the uranium market? Supply constraints. Analysts calling for 125 per pound next year. Price 75 now. I'm playing the junior miners ETF URNJ.
Michael, so I'm 55. If you asked me this question when I'm 30, I would come up with some cockamamie answer because I'd want to sound smart. I have a lot of friends who love the market there specifically, even one of my partners, and have made a lot of money. It's one of those places my expertise is lacking. I'm the wrong guy to ask, so I'm not going to pretend. I don't really have an opinion. But I know lots of smart money that have focused there and done well. And I should probably fix myself and catch up there. That's my answer, because I am a little behind.
All right. Nvidia and AMD failed to rise after their reports. This is timely. Do you think that will happen to AVGO Broadcom as well? They're reporting after the close today.
Yeah, Broadcom, has really done well into the report. They don't typically have monster-sized beats the way Nvidia does. We know the size of their AI platform is getting bigger and really kicking butt. So the expectations are already heightened. I would not look. I think the expected move last I checked, is it like 19 or something? I got to check, but maybe it's 19. I could be wrong. It's 18, 19. I don't think it'll be the expected move. I think it'll be up or down 5-10 points. I think there'll be great numbers, but I think the cake is baked, so to speak, and it would be a lot like Nvidia. I think option sellers win on this print. And I think if you want to own a specialized chip company, Broadcom is the best there is, and I would buy it on dips. Just not here.
$16.95, $17 is your expected move right now. All right. Another earnings report coming up today after the market closes. Lululemon. You've been playing some Lulu in the room after it got really beat up.
Yep.
Do we get another American Eagle type reaction to the report?
I hope so. I'm praying, but it's more prayer and hope. I'm honest. What I feel like I have an edge or not. So we got involved in Lulu when it was down at like 190. I'm just trying. Yeah, it was about 190. I think even maybe 188, 189. But the bottom line is, it had this rally, right? We had bought calls, and they went up quite a bit. I think originally I started with the 200 calls or 205s. They doubled or more, and then I moved to the 215s. This has gone on for a couple of weeks. We're way ahead. I am now playing with the house's money, so to speak, and I'm sticking with it. I am very cognizant of Lulu's situation. I've not been involved in the stock for a while because, you don't have to be a genius to see the competition from all sides of the market, whether it's the low end guys like the Athletica or is it Biore, all the different brands, Roan. I mean, it goes on and on and on. I think my wife has like 4 friends that have their own companies in that market. It's so crowded. It's like chihuahuas, right? They're all biting their ankles. However, the stock has gotten crushed. And I do think it's a name that's not going away. They remain profitable. And it just seems like there are certain times in the market I say, what are the odds they beat? Low. But are the odds of making money so big, right? Is the upside versus the risk so big, it's worth it because expectations are so low. So let me risk this amount in calls. That's the print for me. Now, I did that early on. I love to play this game because if I'm lucky and you have a move early on, the chart kind of told us that maybe we're going to have a bounce. You can play it with no risk because you're playing with the house's money. So that's what we're doing here. Not reaching in my pocket. I'm playing with some profits because it just had a bounce. It's a long shot, but if it works, I think it'll be 150, 200% the expected.
All right. Another thoughts on the quantum sector, IonQ, RGTI, or as you call it in the room, rigatoni, RAQQ, etc. The quantums.
I think what a lot of people really don't understand, I don't know if these companies come to fruition in 3 years, 5 years, 10 years. When I say come to fruition, I mean real revenue and earnings. Now, we all know IonQ is way ahead. And then if you look a little deeper, we know there's one company that actually can raise money from Nvidia today by Honeywell's division. That's way bigger than the rest, right? And they're probably most far along. I think it's all about the market, though. So let me explain. if we have another year of this bull market, and if we could continue higher, then these guys can work. But if we have a 20% correction, a real correction, which we haven't got, right? Even a 10% correction, then no one cares about quantum because there's not real revenue yet. Now, are they going to transform the world? I'm not smart enough to know, but smart people think, yeah, a lot of this will be a transformative technology and you need to own it. I respect that, and they're probably right. But in between, because I'm smart enough to know, or street smart enough to know, it ain't happening in the next 6 months or year. So you get a real correction in the market, these companies are all going low. Now, what I like to do during those periods is pick the best one and buy it when no one wants it. So during April, I actually bought that IONQ at like 20 or 22 bucks. That's how I play it, because I think right now they're going to just be a function of how far the market goes. We got another 6 months of this wild bull market, they can keep going, right? If we get any sort of correction, which doesn't mean the bull market's over, just an average correction, then I don't see why these would outperform.
All right. Michael, who asked our uranium question, said, "Thank you. Always enjoy your expertise and opinion. I'll be joining the room soon." That'll be good. And then he asked another question if you discussed oil. Apologies, may have missed, but we have not.
No, and I've seen the turn. Like the whole group looks better. I was looking at Buffett's pit Oxy the other day. The chart was looking really kind of special. I have a few guys in the room that were traders for years on the floor and traded, all the commodities. Dave's starting to turn bullish. The group as a whole looks better. In my position in it, no. Do I have a big call here? No, but overall, it appears a bit bullish here. And I was looking at Oxy as one that I might play if I'm to partake in the space. So I always say, if there's enough, here's how I look at the market. If I can't find an idea, I'll keep searching. And I'll go to oil. I'll buy USO. I've been known to buy extremes in USO and short extremes, and I've done really well throughout the years. And then in between, I don't play that much in the middle. But if there's enough to do, this is how I play the market. If there are enough ideas, then I don't care about oil because it's not my expertise. Right now, it's been that way. Each day or week, I'm finding sectors and areas, and there's enough volatility and even shorts that I don't have to travel too far from my core expertise. So that's why I'm not that involved with oil. But overall, more bullish than bearish.
All right. Our quantum sector question asker said, "This is amazing answer. Wow, thanks for this."
So, I want to say one thing. I so appreciate that you're saying that, because I always wonder why. So there's a whole group of traders still learning that. Look at a stock and just look at the stock. And they're like, "Will this go up?" I'm like, "Well, tell me where the market's going to be next week." So I was buying Circle today. And a buddy of mine said, "Well, it sounds like you're at a half a position, but I thought you'd buy more." And I said, "Yeah, that'll be after the NFP. I'm not going to buy." I told him, I said, "I'm not going to buy more than 5,000 shares today because I don't know what the hell's happening with the NFP tomorrow. Now talk to me about the NFP tomorrow, right? And give me the answer, and then I'll plan." So we are captive to the environment. The climate always dictates the action. And when it comes to story stocks, and there's nothing wrong with these companies, but they trade by a story, right? Right now, 90% of them don't have numbers. Now, that doesn't mean the stories aren't going to come true, but stories rely on the environment more than anything else. Earnings are what you can kind of hang your hat on. You can only go to a certain valuation. None of these have earnings, so it's all about the climate because they're based on story. So I wanted to say that again because I appreciate that he understood what I'm saying.
All right, let's end here. I think this is a good spot to wrap things up. What's your favorite idea if you had to hold for 10 years? Investment, not a trade.
The next 10 years? I feel like
I think I put this in when we're talking about Cava, and if you were
sometimes we'll ask questions like this. I've seen it. And here's what I say. Dude, don't trade that way. Did you know the market was going to crash in April? I told everyone my best idea I've seen in a year or two is stock sell at 7. Change your life and buy as much as possible. Now, my thought is over the next 2 years, another moment like that happens, and I'll have a much better idea than I have for you today. So you just want to make that clear. So given the environment we're in where everything's bloated, I'm going to tell you Rocket is a favorite of mine. If I had to pick one the next 10 years, Immunome, no doubt. I'm hanging my hat on one of the smartest men ever in the history of biotech that literally created a Seagen from scratch and was sold for 42 billion. So now he runs Immunome, which has under $1 billion market cap. I'll hang my hat there, and I'll hang my hat on Rocket. But I'm really going to hang my hat on the fact that this is an expensive market, and we'll probably get better opportunities to give you 10-year picks over the next year. That's my real answer.
All right, David, as a real trader, so I'm going to let him get back to it. If you want to get his free newsletter, you can go to t3live.com/DP. We send this out weekly. It's a readout of his morning call. You get all of his levels and all the things he's looking at in the market on Tuesday mornings. So again, t3live.com/DP. David, have a great rest of your trading day. And I hope we have an exciting Friday with the jobs report tomorrow.
Have a great day, all. Take care.